Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind big companies' finances, and you won't believe what Pinnacle West Capital Corporation, the parent company of Arizona Public Service, has just dropped in their latest quarterly report. Get ready for some major reveals that paint a very interesting picture of their operations. Before we dive in, if you're new here and love getting straightforward insights from SEC filings, make sure to hit subscribe, and for a deeper dive into company strategies and connect with fellow finance enthusiasts, join our Discord community linked in the description below. Let's kick things off by looking at Pinnacle West's financial performance. The good news is that their operating revenues are up to $1.4 billion for the 3 months ending June 30th, 2025, compared to $1.3 billion in the same period last year. That's a solid increase, showing they're bringing more money in the door. Now, when we look at the bottom line, Pinnacle West's net income attributable to common shareholders for the 3 months ending June 30th, 2025 was $193 million, versus a bit lower than the 2000 also increased interest expenses on their debt. Digging into earnings per share, Pinnacle West's basic earnings per share for the 3 months ending June 30th, 2025 came in at $1.69 a year earlier. And on a diluted basis, it's $1.58 compared to $1.79 a year earlier. And on a diluted basis, it's $1.50 compared to $1.79 a year earlier. And on a diluted basis, it's $1.58 compared to $1.76 last year. So earnings per share have also taken a hit, not necessarily a red flag, but definitely a trend to watch. Let's shift our focus to the balance sheet. Looking at Pinnacle West's assets as of June 30th, 2025, we see total assets are over $29 billion. This is a significant increase from around $26 billion at the end of last year. A big chunk of this growth comes from property, plant, and equipment, which increased substantially. This suggests they are heavily reinvesting in the company's infrastructure, probably to meet future energy demands and comply with new regulations. Now for the liabilities, Pinnacle West's current liabilities have gone up to over $3.4 billion compared to about $2.8 billion at the end of last year. This is a rather large jump and is a key area to monitor, especially with short-term borrowings and current maturities of long-term debt, making up a good portion of this increase. Looking at cash flow for the first 6 months of the year, Pinnacle West generated $663 million in cash from operating activities. This is up from $537 million last year, which is great news, showing strong operational cash generation. However, their investing activities used up a significant $1.25 billion, mostly due to heavy capital expenditures. This means they're spending a lot of money to build and maintain their infrastructure, ultimately impacting their financing needs. Financing activities show a different story. Pinnacle West provided about $605 million in financing cash in 2025, up from $349 million in 2024. This increase is driven by higher short-term borrowings, which is how they are funding those large investing activities. Now let's talk about Arizona Public Service APS as a subsidiary, is where most of the action happens. For the 3 months ending June 30th, 2025, APS's operating revenues also increased to $1.36 billion compared to $1.31 billion last year. But just like Pinnacle West, APS's net income attributable to common shareholders saw a dip from $2,001 in 2024 to $2,042 in 2025. This is primarily due to those higher operating and maintenance costs, increased depreciation and interest expenses. Pinnacle West also has another subsidiary, PNW Power, which is involved in certain wind and transmission projects. The sale of Bright Canyon Energy Corporation, a former subsidiary to Ameresco, was completed on January 12th, 2024. This sale generated a considerable gain for Pinnacle West, boosting their financial figures in the prior year. One of the most critical parts of this filing has to be the regulatory landscape. Arizona Public Service is a heavily regulated company, and we see multiple mentions of rate cases and filings with the Arizona Corporation Commission. For example, APS filed a 2025 rate case seeking a significant increase in base rates of $570 twin and weighty and a weighted average cost of capital of 7.63%. The outcome of this rate case will be crucial for their future earnings. In the other increase they're asking for, and they're proposing a capital structure with over 52% common equity and a weighted average cost of capital of 7.23 they're asking for. And they're proposing a capital structure with over 52% common equity and a weighted average cost of capital of 7.63% the outcome of this rate case will be crucial for their future earnings. We also see significant discussions around environmental regulations, and Plant Retirements APS has already closed Unit 2 of the Cholla Power Plant and is planning to retire the remaining Units 1 and 3 by April 2025. This involves substantial costs for environmental remediation and closure, which they're seeking to recover through rates. Wildfire mitigation is a major focus for APS. They're increasing investments in fire safety and are even looking at AI-based fire sensing cameras. These efforts are essential for reliability and customer safety and have led to increased costs, which they're seeking to recover from customers through rates. Looking at APS's balance sheet as of June 30th, 2025, their total assets are around $29 billion, a notable increase from $25.9 billion at the end of 2024. This growth is powered by their property, plant, and equipment, which is up significantly. APE's total equity has also grown to over $8.6 billion from $8.3 billion at the end of last year. This indicates a strengthening financial position for APS itself. On the whole, Pinnacle West is showing revenue growth, but a slight dip in net income compared to last year. This is largely due to increased expenses and interest costs. They are making massive investments in their infrastructure, which is a good sign for future growth, but it's putting pressure on their financials in the short term. UPS is also experiencing similar trends with revenue growth, but slightly lower net income. This is heavily tied to regulatory decisions and the cost of serving their customers while also managing environmental and wildfire mitigation efforts. And what about their creditworthiness? Moody's, Standard & Poor's, and Fitch all have stable outlooks for both Pinnacle West and APS with solid investment grade ratings. This is a positive sign indicating that lenders generally see them as a safe bet, which should help them access capital for those big investments. Now, for my take on all of this, Pinnacle West and APS are in a very capital-intensive industry, and it's clear they are investing heavily in their future, particularly in renewable energy storage and upgrading their grid to handle increased demand and manage risks like wildfires. This is necessary for long-term sustainability and reliability, but it's also reflected in their rising expenses and debt. The company's strategy seems to be a balancing act between keeping costs affordable for customers through rate management, regulatory approvals, and operational efficiencies, while also investing in a cleaner and more resilient energy future. The push for carbon neutrality and the need to meet unprecedented demand from new industries like data centers is creating significant challenges and opportunities. The outcome of the 2025 rate case will be a major factor influencing their profitability in the coming years. The risks around environmental regulations and wildfire mitigation are also substantial. These could lead to unexpected costs and require significant capital outlays that might not be fully recovered through Rates A. Key takeaway is that despite the slight dip in net income compared to last year, the underlying operational cash flow is strong and the company is making strategic investments for the future. It's a mature industry with significant regulatory oversight, so predictable earnings are generally expected, but managing those regulatory and environmental challenges will be key to success. And alright, that's a breakdown of Pinnacle West and APS's latest filings. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more insights. Thanks for watching. See you next time.